Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, China is facing some substantial economic challenges. China's in a tough spot with its currency. Too much foreign currency is built up domestically in their banks, and their official reserves are high too. Previous attempts to use this funding for international investment has failed because the projects they invested in turned out to be largely poor investments. This build-up is putting hard upward pressure on the yuan exchange rate. These private reserves now exceed $1.1 trillion and growing fast, up 35% in a year. And the public reserves are at a similar level, but fairly stable. China is still in its week-long Communist Party anniversary celebration, but their PMI reports are not really helping the mood. The private sector services PMI is recording a sharpish turn away from expansion to just a steady state and its tamest result in a year, just barely expanding now. That is much more of a pullback than what the official services PMI recorded. An underreported pandemic spread there may be the cause. And Japan's services PMI is actually contracting, but noticeably less now that they're getting to live with the latest pandemic outbreak. There was a services PMI out in Australia too. Their service sector activity expanded at a healthy level in June, even if it wasn't as strong as recently. It was affected by the lockdown in Victoria that extended into June. Nevertheless, overall expectations remained positive alongside hiring activities, although some firms highlighted issues related to a shortage of labour. Pricing pressure, however, accelerated to a record rate in June. Singapore retail sales recorded a disappointing result, even though this data was only for May. Sales fell more than expected from April, and their retail sales index is still 13% lower than for May 2019. And staying with May data, the OECD is reporting that CPI inflation rose to 3.8% in their member countries, driven by energy prices and largely influenced by the 5% rise in the US. US Treasury 10-year yield starts today at 1.43% and unchanged while the US is on holiday. And the price of gold is now at $1,792 an ounce, which is up $5 from this time yesterday. And oil prices are higher by about $1. In the US, they're now just under $76 a barrel, while the international Brent price is now just under $77 a barrel. OPEC has so far been unable to agree on raised production quotas. And the Kiwi dollar opens today just on 70.2 US cents and marginally lower than this time yesterday. Against the Australian dollar, we're soft too at 93.3 Australian cents, and against the euro, we're little changed at 59.2 euro cents. That means our trade-weighted index starts today down slightly at 72.9. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.